Hi everyone, it's Saturday, November 30th. This is Liam McMahon, the weekend moving average video. Really the weekend price action videos. I use moving averages, but only as a part of a bunch of other stuff. Thank you very much for watching. Going to run through a bunch of the trade setups that we have next week, beginning of a new month, beginning of December, end of the year. Lots and lots of important stuff going on the first couple weeks of next month. All right, really starts off pretty quick. Monday night, Tuesday morning, we have the RBA rate decision and their statement. We have ADP, NFPs, trade balance. The Bank of Canada makes a rate decision. The Bank of England makes a rate decision. The European Central Bank makes a rate decision. Non-farm payrolls come out. So basically everything, all right? First week is going to be huge. So let's say it's good to take a look at some of the setups that we're going to be going into starting this new month. Before we do that, please take a moment to pause the recording, read the risk disclaimer. It should now be on your screen. And then we'll go to the charts. Okay, so we're going to start with Euro. It's my favorite potential setup for next week. I will tell you why. All right, so I think there's some nice symmetry going on here in the market that's worth noting. You can see here this bearish engulfing candle here on the weekly chart. We dropped down to test this 200-week EMA. We've rallied the last 3 weeks. I think there's a distinct possibility that may be coming to an end. I'll show you why I think that. Okay, that bearish rejection came right at a major 618% fib. All right, the 618% fib, 149.39 to 120.40. And now, after that major drop, we are now approaching the 618% fib of that major drop, and we're holding. All right, so this candle, not enough of a rejection candle for me really to short. I would like to see a move below Thursday's lows here, so below 135.60 or so, to trigger me short, to eventually see a strong move lower here off this 618% fib. I mean, there's still a distinct possibility that we're going to continue to squeeze higher, which is why I'd really like to see these previous lows broken. I'd like to see this trend line get broken. But if we do see... if we do manage to get a breakdown here of this 618% fib, I'll be looking for 130.80 and then 127.50 for my targets on that short. I think there's a possibility that, there's a distinct possibility that we're going to see that start to play out next week. So definitely something to keep your eye on. But, pick your setup carefully. You can see we've had a pretty decent squeeze higher. May continue. So be discriminatory in your setups. Keep your stop tight. It might be, if it does play out, it's going to be a big move. There'll be lots of opportunities to get involved. So don't force it. Wait and see what happens. Pound is actually an interesting place here as well. Let's kick it back up to the weekly chart here. Delete all these drawings. Okay, so the pound is arguably on a breakout path. All right, you can see we broke out of this level there. I'll actually put that trend line in. Okay, this is a pretty bullish candle here last week. We really got, we covered 161.36 up to over 220 or so pips, really. So pretty decent move higher. We are right at the top of this major range. Or rather, we are testing some significant previous highs. Let me draw the price level here. Okay, this high here, pretty clear reversal candle, launched off of basically where we're trading at right now. Of course, we didn't see any sort of pullback like we did on this candle. We finished pretty close to the highs. It looks pretty good. It's another one of the things that's making me temper my bearish euro belief because it does look pretty decent here. First major support comes down at around 162.77. If we see a pullback to there, I like it for longs. If we do see a pullback continue down towards this trend line, I would also like to take a long down around 161.75 or so. All right. So the pound looks pretty good here. We are testing some resistance though, so we'll see if that resistance starts to hold. And we'll kind of go from there. This breakout here out of this flag, it does target 166 in terms of just the size. Actually, that's not even true. 166 is a very conservative measurement. I got that by just measuring this as a range and putting the range on top of the breakout. That gives us 166. If you want to measure it like a flag, it gives us really closer to 170, 172. So we could be in a pretty big pound move higher. We'll see how that plays out. Bank of England will be important. I don't think we're going to see it yet, but we're getting to the point where we may see the Bank of England votes not be 009. All right, we may start to see votes for people voting to reduce the amount of stimulus in the what do they call it? The asset purchase facility. Okay, I don't think we're going to see it yet, but we're getting close to that. You can see the Bank of England removed one of their lending programs for mortgages. They're starting to drift towards monetary policy normalization, and they don't care about a strong pound. Okay, that's important to remember. A lot of the central banks that we've seen tip hawkish, all right, the RBNZ, the RBA come to mind. They're concerned about housing bubbles, so they're starting to be a little bit more hawkish, but they don't want their currency to rally, which sort of limits their ability to act in that field. The RBA is actually a big fan of the pound, okay? They have inflation problems, or the potential for them at least, and a stronger pound would help dampen those inflation difficulties. So the Bank of England has no objection to the pound rallying, which means that they will be more than willing to raise rates, start to taper their asset purchase facility sooner rather than maybe the RBA and RBNZ may be willing to step in. So just sort of keep that in mind when you're looking at the pound and thinking about, you know, how bullish it looks. All right, so we did Euro, 618. We did the pound. Okay, so let's look at the Aussie. Kind of watching the Aussie here for potentials to rally, but it doesn't quite really want to do it. All right, we had a little inverse head and shoulders here that didn't play out. We have a little double bottom here. I'm still watching this level, okay, for a potential breakout, except for now the breakout will occur further down the line, obviously, okay. But we could see that, we could actually see this big mess here start to turn into a head of an inverse head and shoulders, left shoulder head, and then we'll put in a right shoulder and rally. Those are just possibilities. For me, okay, I'm still looking to short Aussie on any rallies up towards 93. I think we'll see that rally towards 93. I hope we'll see that rally towards 93. And I'd like to start trying to short it as we start to get up into that level. Again, we have the RBA. They'll likely try to talk down the Aussie, but I think markets are getting pretty tired of just the talk, so we'll be looking for whether or not they're going to reiterate the fact that they'd be willing to do some intervention. I think for right now, it is a just a threat with no real follow through behind it. I think with we've seen, I mean, if we click out to the weekly chart, if you look at the last couple of weeks for the Aussie, okay, I'm not sure they're going to intervene now that once we've declined this far. I think if they're going to start intervening, it would start to start it up around 97 or even higher. So I do think that the Aussie is medium term, short to medium term in the possibility for a rally. Okay, but I think it's important to remember that longer term weekly chart, that's a 50% fib rejection. So anything that I'm looking for here on the rally side up towards that 93 figure, all right, I'm eventually looking to pile on short for a move to new lows around 84. So definitely medium to short term, sort of bullish the Aussie. Not sure I'm going to trade it. Going to watch it, see if there's a clear-cut setup. I might take it for a small swing trade, maybe 60 to 80 pips or whatever. But for the most part, I'm eyeing up rallies as hoping for rallies for an opportunity to start piling on shorts here. So definitely something to keep in mind is that. Real quick. Let's go to the daily chart. Kiwi may be breaking out of this head and shoulders finally. Okay, starting to get some downside. This candle, ignore this candle. It was a weird day on Friday, but starting to finally pile lower. Measured moves around 78, 79, so could be seeing some lower here on Kiwi. Dollar yen, all right, I still see 103.72. 103.50 basically, as I do still see the Nikkei going up to 16,000. All right, we're trying to get there. We're only about 290 pips short, or points short. And then at 16,000, I think we may see kind of a rollover here on the Nikkei and then on yen pairs. All right, so that's what I'm looking for going into next week. I think there's going to be a lot of great trading opportunities in December. I think it's going to be a very exciting month. A lot of volatility. So, get ready and good luck. I'll talk to you soon.